Bitcoin, Ethereum, blockchain, NFTs, crypto. These words are everywhere. Some people claim crypto will revolutionize money. Others call it a scam. Your friend made $10,000 in crypto. Your coworker lost $5,000. So what's the truth? Should you care about cryptocurrency? Should you invest? Today, you're going to get a balanced, honest breakdown of what cryptocurrency actually is, how it works, the real risks and opportunities, and whether it deserves a place in your financial strategy. No hype, no fear, just facts and practical guidance. By the end, you'll understand crypto well enough to make your own informed decision. Let's strip away the hype and explain this simply. Cryptocurrency is digital money that exists only online and isn't controlled by any government or bank. The simple analogy, regular money, dollars, euros, yen, created and controlled by governments and central banks, physical and digital forms. Cryptocurrency, created by computer code, controlled by no one centrally, only digital. How it works. Traditional money. Banks track who has how much in centralized databases. The bank controls your account. Cryptocurrency, a decentralized public ledger called a blockchain, tracks ownership. No single entity controls it. Think of blockchain like a shared Google Doc that everyone can see, but no one can unilaterally edit. All transactions are recorded permanently and transparently. The key features: decentralized, no government, bank, or company controls it. Transparent, all transactions are public, though identities are pseudo-anonymous. Limited supply, most cryptocurrencies have a fixed maximum supply. Bitcoin, 21 million coins. Currently, about 19.5 million exist. Global, send money anywhere instantly without banks or borders. Programmable, smart contracts can execute agreements automatically without intermediaries. Why it exists. Created in 2009 by Satoshi Nakamoto, identity still unknown, after the 2008 financial crisis. The goal, create money that governments can't manipulate and banks can't control. Whether it achieves this goal is debated, but that's the original vision. There are thousands of cryptocurrencies. Here are the main categories. Type 1, store of value, digital gold. Bitcoin, BTC, the original and largest cryptocurrency, designed as digital gold, scarce and valuable. Limited to 21 million coins ever. Currently, about 19.5 million exist. Main use, long-term value storage, hedge against inflation. Type 2, platform cryptocurrencies. Ethereum, ETH, platform for smart contracts, programs that run automatically on the blockchain. Powers decentralized applications, DApps, NFTs, and decentralized finance. Think Bitcoin is digital gold, Ethereum is a digital computer. Type 3, stablecoins, Tether, USDT, USDC, cryptocurrencies pegged 1-to-1 to the US dollar. Designed to avoid volatility, $1 worth should always equal $1. Used for trading between cryptocurrencies without converting back to regular money. Type 4, payment cryptocurrencies, Litecoin, Ripple, XRP, designed for fast, cheap payments. Lower transaction fees and faster processing than Bitcoin. Type 5, meme and speculative coins. Dogecoin, Shiba Inu, started as jokes but gained massive followings. Extremely volatile, driven by social media hype, not fundamental value. The concentration of value. Bitcoin and Ethereum represent about 60 to 70% of total crypto market value. The other thousands of coins represent the remaining 30 to 40%. Most crypto investors hold primarily BTC and ETH if they're serious about long-term investment. Let's examine why people believe in crypto. These are real arguments, not hype. Argument 1. Protection against inflation. Governments print unlimited money causing inflation. Bitcoin has a fixed supply of 21 million. No one can print more. This scarcity theoretically makes it inflation resistant. Argument 2, financial freedom. 1.7 billion people globally don't have bank accounts. Crypto allows anyone with internet access to store and transfer value without needing banks.
Argument 3, decentralization. No single government or corporation controls it. Can't be frozen, censored, or seized easily. Useful in countries with unstable governments or currencies. Argument 4, technological innovation. Blockchain technology has applications beyond money: supply chain tracking, voting systems, smart contracts. Supporting crypto means supporting this innovation. Argument 5, portfolio diversification. Crypto often moves independently of stocks and bonds. Adding 5 to 10% crypto to a portfolio can improve risk-adjusted returns, theoretically. Argument 6, early adoption opportunity. If crypto becomes mainstream, early investors benefit enormously. Bitcoin went from $0.01 to $60,000 plus at peak. Early investors made life-changing returns. These arguments have merit, but they're only half the story. Now let's examine the legitimate concerns. These aren't just from haters. Concern 1, extreme volatility. Crypto prices swing wildly. Bitcoin dropped 80% in 2018, 70% in 2022. Great for traders, terrible for stable value storage. If you need your money in 6 months, crypto could easily be down 50%. Concern 2, no intrinsic value. Stocks represent company ownership, profits, assets. Real estate generates rental income. Gold has industrial uses and jewelry demand. Bitcoin's value is purely based on what someone else will pay for it. If belief disappears, value could theoretically go to zero. Concern 3, regulatory uncertainty. Governments are still figuring out how to regulate crypto. New laws could severely restrict usage or value. China banned crypto entirely. Others may follow.
The honest answer about cryptocurrency? We don't know yet. It could be the future of money and a transformational technology, or it could be a speculative bubble that eventually fades, or most likely somewhere in between, a niche technology with real but limited applications. What we do know, blockchain technology has interesting use cases. Bitcoin and Ethereum have survived 10+ years, which suggests some staying power. Crypto is extremely volatile and risky. It's not a replacement for foundational investments like index funds. The smart approach: build your financial foundation first. Emergency fund, retirement accounts, index funds, debt elimination. Once that's solid, if you're curious about crypto, allocate 5 to 10% as a speculative position. Choose Bitcoin and Ethereum, not random altcoins. Hold long-term through volatility. Never invest emotionally or based on hype. Should you care about crypto? You should understand it because it's part of the financial conversation. Whether you invest is a personal decision based on your risk tolerance, financial situation, and belief in the technology. It's okay to invest a small amount. It's okay to invest nothing. Both are valid choices. What's not okay, investing significant money you can't afford to lose because of FOMO. Do your research, make an informed decision. Whatever you choose, make it deliberately, not impulsively. Crypto isn't going away completely, but whether it becomes mainstream or remains niche, no one truly knows. Proceed with caution, curiosity, and clear-eyed realism.